You can look at this problems on preparation of statement of profit or loss, section C, 6 marks problems in the final exam. Question number 1. From the following information, prepare statement of profit and loss for the year ended 31/3/2018 as per Schedule 3 of Companies Act of 2013. We have to prepare here only statement of profit and loss. No balance sheet here. Revenue from operations, 5 lakhs. Purchase of goods, 3 lakhs. Salary to employees, 40,000. Leave encashment, 10,000. This amount goes to employees, leave encashment, like salary. Rent and taxes, 30,000. Repairs to machinery, 20,000. Tax, 30%. So how to calculate that? I will explain when I do the problem there. So if you look at the problem, here you are going to find that question number 1, page 103. You can see here, page 103, problem number 1. Then statement of profit and loss for the year ending 31/3/2013. Then this is the pro forma as we have discussed earlier in the theory. Revenue from operations, add other incomes, that will give you total revenue. That's why I given 3 is equal to 1 plus 2. This is 1, this is 2. Then less expenses have taken as number 4. There are a few items under this, 6 categories, and the 7th one is other expenses. If any of the expense given is not connected to any of these 6 headings, cost of material consumed, A, purchase of goods, B, changes in inventory, 3, C, employee benefit expense, D, finance cost, that is the interest paid is finance cost, that is E, depreciation and amortization is F. If any of the expense not falling under this 6, the 7th one will be other expenses. So total expenses, that is all the 7 will be total expenses. Then we have to go for profit before taxes. That will be 5. So 5 will be 3, total revenue minus the total expenses. So we can call this as total expenses. Total expense as 4. So 3 minus 4 will be profit before taxes. Then less taxes. Taxes, here we are connected to income tax. Income of the company. So company's income tax. So after deducting that, you get profit after taxes for the year, whichever year. So this is 2012-13. So it's going to be for that year. Then I have got note number 1 and note number 2, as you can see here. So note number 1, note number 2, if there are more than 1 expenses under any of these 6 items, cost of material, purchase, whatever, if you have more than 1 amount, we have to prepare a note. Total this total will be coming to this main statement. This is called subnotes. This is called the note, that is calculations. So from this calculation, we are going to add and put the total over here. So let me go by one now. So how to go about, okay. So first information we will see here, revenue from operations, 5 lakhs. So revenue from operations, we have here, first one, straight away amount for the revenue from operations. Next, purchase of goods, 3 lakhs. Purchase of goods, only one item or one amount. 3 lakhs. Then salary to employees, 40,000. Leave encashment, 10,000. So I told both these amounts belong to employees, paid to employees. So these two, there are 2 items. So we are going to prepare one employee benefit expenses karke. We will prepare one note number 1. So there we are going to make an entry regarding that. Salaries to employees, 40,000. Leave encashment, 10,000. Next, rent and taxes, 30,000. And repairs to machinery, 20,000. So let us see rent and taxes. Do we have any heading? Check. Do we have any heading for rent karke? We don't have that heading at all. So rent will come under other expenses. Even the next one, repairs to machinery, we have a depreciation. Depreciation is different, repairs is different. So repairs to machinery, 20,000. We don't have any heading. So that is going to be here. Repairs to machinery, 20,000. Now we have left with only tax. That will come to that later when we are preparing the income statement. So now let us go for the totaling of these two. Notes, 40 plus 10, 50,000. 30 plus 20, 50,000. So now employee benefit expense will be 50,000. I will take it to the main table. Other expenses also 50,000. I'll enter as 50,000. Now you can see we don't have cost of material consumed. We don't have change of inventory. We don't have finance cost. We don't have depreciation. So need not enter anything there. We can just leave it as it is. And even here, add other incomes. We don't have any. So we don't have any income therein. So we are going to enter nothing. So 5 lakhs is the total revenue. Then we are going to add all the expenses. 3 lakhs plus 50 plus 50. It comes to 4 lakhs. So 5 lakhs minus 4 lakhs we have to do. That will be 1 lakh. That is profit before taxes is 1 lakh. And now we have the last adjustment, tax 30%. So tax is calculated on, tax is 30% is calculated on the profit what you have got it now. That is 1 lakh. Profit before tax 1 lakh. So on this 1 lakh, 30% is calculated.
40,000.
30,000. Very good. So profit after tax comes to 70,000.